The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. How's everybody doing out there? Back with another week, man. Always blessed if I come on here and discuss my favorite topic, which is stocks. Talk about stocks, talk about the stock market. My name is Donald Green. I'm the founder of the First Fruit Stock Club. We are a club of traders, long-term investors, and passive income receivers. And I say that because we all follow what's called the First Fruits formula. All right. And we have a goal in a club, right? Is if we can just have a $10,000 a month. All right. And hopefully my goal is to help the club achieve the goal by giving trade ideas, investment ideas. And yeah, that's it. So please, just to move forward so I can get into that, I ask you to please subscribe the show, let a few other people know about they want to get some information on how to make money in the stock market. All right. So look, the information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including potential loss of principal. Past performance is not indicative of future results. Always conduct your own research with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Man, let's get back to it. Man, we've had a volatile month, to say the least, a volatile month. But you know, the goal is, and the reason why you have why I created the club is being able to develop a plan for us to navigate the month and hit our goal. So, the number one thing, you know, as a trader, as an investor, and it's the profit, right? The profit. So the goal is like how do we profit? How do we actually make money in the market? The First Fruit Stock Club formula allows us to generate money from the market. We do it in three ways. All right. First thing is the goal is to have a $10,000 a month, and we're in July, $10,000 July, $3,000 to $4,000 in dividends, $5,000 in trading, and $2,000 in long-term gold. The dividends are the core of our portfolio, right? But yes, dividends, you do need to have some money to put in dividends to generate the return you need. But a lot of times people think that, well, it's going to take me forever. No, there are funds out there. If you develop a portfolio of funds, you can have a nice passive income, a few $1,000s a month. It's going to take you, you know, I'm not saying this, you're going to do it overnight, and it depends on how much money. But if you follow the formula and you give it time, you will hit that passive number that you want, which is really important because with dividends is net, right? Meaning once you receive the dividend, you receive the dividend. I've done a lot of things, real estate, business, whatever. there was always a net. You know, you always had to pay your expenses when you receive dividends, and that becomes your passive income. That money comes to you, right? That money comes to you. Now, so what we do, we don't just stay there. We take our dividends, and because the dividends may not give us super long term returns that we want, we will take our dividends and reinvest it to the other parts of the portfolio. The second part is a long term investing, right? Long term portfolio. So we can take our dividends and we move it to long term investing. Why don't we just take the dividends and put it in long term from the door? Yes, you can do that. But what happens is, investing is a long term game. Man, life creates problems, right? And, financial problems. Things are more expensive. Having an extra passive, a source of passive income relieves some of the financial stress that you may have in your life. Now, hopefully, that you have a great month and your budget stays intact and you're able to do those particular things. And you're able to take all of your cash flow from your dividends and invest it to the other sides of the portfolio. But sometimes life happens, right? Life happens. Things come up, or you just need a break. You want to go on vacation, you want to do things, you want to improve. We're about to make some improvements to our house, right? They're expensive, right? And improvements outpace the cost of those things. When you talk about a 10 to $20,000 lump sum of money, it outpaces the money that you'll make, right? So, and the worst thing to do is to have to go into debt for those things, right? So investing in a market helps you with your lifestyle. Having a passive income stream helps you in a lifestyle. It also helps you from the standpoint of being able to stay and not touch your money in your long-term portfolio. Long term is what it is. It means long term. And one of the presentations I've done in the past, I always talk about the investment into Tesla, right? And just at $1,000 invested at Tesla at its IPO, which was 2010, turned to $352,000, right? $352,000. So just went that, but that's a pretty long, that's a 16-year period. But man, we can shrink that period. Guess what? If we were able to also invest when the stock was down. So we have to have money available to us, right? When the market goes down. That's another purpose for the dividend. So having money and having cash available, because sometimes life is, and we may not be able to invest the money from our job. We have a source of other income that we can invest when we can't do that. Now, the plus thing is that when we can put those things together, meaning we managed our budget, we get a good budget for the month, and we're able to take our budget and we're able to take the cash from our dividends and then put it in, and then if the market is down and we're able to buy our stocks at a discount, we accelerate the time frame that it takes. We cut it in half, 16 to 8 or 8 to 4 or 4 to 2 years to hit your financial goals by investing, having money available when the market goes down. The dividend account allows us to do that. And then lastly, how we accelerate the whole thing is by investing in leaps, right? Long-term equity options, right? And what we do is we invest in these leap contracts, which are leverage positions. Basically, when you buy a leap, you're buying 100 shares of a stock, right? You're controlling 100 shares, have the right to buy or sell the contracts. So as the contracts grow in value, so does so what you're able to do is resell that contract out into the market, right? And then we can start the process all over again, and then we accelerate it. And by going through this process over and over, dividends to long-term portfolio is growing in the background. Market dips, we're able to put more money in our long-term portfolio. Market moves up, we're able to to sell our option contracts, put it back in our dividends, then we have more income. And we continue doing this process over and over again. It's like it's not an overnight process, but it works, right? It works because the discipline sometimes that it takes to just to have a long term portfolio and just sit down and wait can be tough, especially in the the way how expensive things are now. So by starting that process, and what I do is I meet with everybody by starting that process and talking about financial goals of the people in the club, and that's why we're able to do that. So let's get into the market. Um, Man, the market is about behavior, right? The market is about behavior, and when we're talking about the market, we're talking really about four behaviors in the market. You're talking about risk off. That means when that means that everybody's selling, no matter what. Stocks are down. All stocks are down. We really haven't had. Well, I guess we have had some risk off last couple of weeks, but we haven't had a full risk off with the Dow, the Nasdaq, the Russell. Lately, one has been up, one has been down, they've been trading, especially the Russell, the small stocks, and we've been receiving something. Everyone's talking about the broadening out of the market, right? So that's been happening lately, but we haven't had a full risk off event. Stay tuned. Stay tuned. So the next thing is market communication. What is the market saying? Right? What are people saying about the market? What is going on? Well, if we go and look at the chart that I have here, is that the Nasdaq uh, was doing fine, and then on the 13th it was fine on the 10th. The 10th was a Friday, but on the 13th, the Monday, tensions escalated in the Iran USA war, right? Tensions escalated. There's, firing on both sides. And therefore, the price of oil jumped 10%, right? So remember, the price of oil kind of controls everything because the price of oil is everything. When you look at it, oil is in everything, and transportation, and it just increases the cost of the market in a lot of things. All right, the things we buy. All right, when prices go up, profits come down. Okay, prices go up, profits come down. What that creates some sell momentum in the market. That's basically what happened, right? That's basically what happened. The market started to sell off, and the market started to sell off. So our goal right now is that we started with the beginning of July has been risk off, but we're trying to map our way, right? And there's the market map. We're trying to map our way to risk on, right? The goal is to get to the risk on, which is tough because the market is going up and down, and you have to find places or areas in the market to where you can profit, where you have to find entries where you can profit. And we're just discussing from the formula that I show you that we use in the club. We're discussing strictly really the whole thing. So entries in the long term where we can buy some of our favorite companies that we plan to hold for the next 5 to 10 years, right? We can buy those at a discount. Entries in options, definitely, we want to buy option contracts discounted, right? Discounted option contracts. We don't want to pay retail price. We want to find a wholesale price for our option contracts. All right. And we will hold our option contracts from it could be from a week all the way up to 180 days or even out a year, right? It's up to you. A lot of times the contracts that I buy are usually 6 months out. 6 months out. I have done some a year, but a lot of times I usually executing, and most option contracts are executed way before expiration. Okay. But I mean, options are risky. They do involve risk. You can lose. all the principal and the money you invested, but whatever you invested, that's all you can lose in options. But you can have, you can multiply your income. You know, option contracts can go 20, 30, 100%, 200%, and within a week or a day. And in this market, I've decided just to take money off the table where I'm still in some contracts now, um, and getting a little beat up, but that's okay. They have what happens is we buy time, right? Like I said, the contracts a lot of times that I buy are usually 6 months out, 4 to 6 months out, right? And sometimes longer if I really like the company, a year out, and I'm able to sell those hopefully at a profit. And the faster I can profit, the better. You know, so that is it in a key of what we do, right? So, but what's happening now is because of the spike in oil, the market has been very indecisive, right? And what we want to move from indecisive, where people don't are really nervous about putting in plays in the market, to where they are supporting the move in the market. If we can get to that support where people are supporting and moving into the market, then we'll be able to put ourselves in that support, and with that support, then we can take off, and that's where we get our gains from, right? But it's all about the process and the formula. So one of the companies that has enabled me at least this month, right, to hit one of my goals is Facebook, or Meta, right? Meta was a stock I purchased, or option a contract. I purchased a few contracts. I opened up contracts on the ninth, and man, it went up. It skyrocketed up by the end of the week, and then it traded down, right? It went up like 100%, right? And sometimes that happens. Like soon as you soon as you buy the option, the contract can just skyrocket in price. The demand of it, the stock is, related some news, doing well. Um, Meta stated that they were going to go in the data center business, and rent out some of their compute that they use to hold their information, and the market liked it. And I like Meta right now. I own it in my long term portfolio, but I also own it. Also was able to hit a 160% on Meta in the club, and I put this play in the club, and I was like, guys, I'm getting on this. Like this is the one. This is the one. And what happens is not all the plays will turn out like a Meta, but you'll hit one of those where I felt really good in my model that I use for the club. It was fitting into the boxes that I have. It was rallying, and it was coming off the rally, and it built support. So what I was able to do is get on the support, and then it bounced up and rocketed back up, and I was able to close out at 160%. So to help me hit close to $5,000 for the month, right, for trading. All right. Now I do have some other ones, but they were really small positions where I cut them out like at a couple $100, where I wasn't I didn't like the positioning of it and the way it is, and I felt like I could go back in and position, right? But that happens. But when you get a winner, like when I thought it was Meta, you want to really dig down and get that one. And what I try to do is I try to get those to the club when I get a really good idea. My ideas lately, because the market's so volatile, just kind of been sitting back and waiting and looking at the landscape, understanding the communication. And I like the Mag 7 right now. The Mag 7 is at a discount. Some of them aren't too far away from the 200-day moving average, right? Probably Amazon is the closest, I think. And Amazon is the closest, and Tesla and I guess I don't know if Tesla's considered the Mag 7, but Tesla's probably the furthest from the 20-day moving, 200-day moving average. But I mean, but the problem is, with, like I said, the market, the communication in the market, the communication, excuse me, will create the environment, and the environment that's been created around the Mag 7 is that they're spending too much money. But I'll tell you what will happen, and I don't know when this will happen, but if they ever announce that, they're going to cut their spending, all the other ancillary stocks like the Micron, um, and Nvidia of the world. Well, I don't know. I could say that they will go down, but then you have all these other things that are coming to market, such as robo taxis and robots, and all these different things that need chips and memory. So I just think that the demand is going to be there for a while. But how would a Mag 7 communicate when they say, "Hey, look, we we may not be buying as much or investing as much in AI." Like, when will that moment happen, right? And that's worrisome for the market, for me, because I have some, I have I'm invested in the Mag 7, but I just don't think we're there right now. Man, like SK Hynix. I know a lot of people say, well, you can't invest in the can't invest in IPOs. Well, it wasn't an IPO, it was an offering. But you can't invest initially because of the hype around it. And initially, the first day it was down by a lot, right? It was down by a lot, then it bounced back. So it's going to be volatile. But what happens is, what I tell everybody in the group is, like, you don't have to go all in, right? You don't have to go all and put all your money, especially in the IPOs or the new offerings, because they're promoting it. You're going to see a lot of advertising around. It's like they're bringing a new product to the market, and you'll see it promoted on television, or a new movie, right? You see movie commercials all the time when they're bringing a new movie. So what happens is, you just kind of have to wait and see what happens. And just like for the new movie, you ask, hey, did you people who went to see it, what did you think? Was it good? They say, oh man, it's well worth it, right? Well worth it. My kids and my wife were bad at it because the latest movie we saw was horrible. But man, I like going to the movies. Don't know if they're going to the movies anytime with me anytime soon. But what happens is that you kind of wait and sit back. But what I tell them is that you don't have to, like, buy a bunch. You can buy just a few shares, or 1, 2 shares, or open a position and watch the stock, watch the behavior of the stock. Right? Where is it? Is it on risk on? Is it on risk off? Will it be undecided? Right? What will happen? Are there going to be a lot of information coming out on the stock, and how will the market disseminate the information? Will it be a positive environment for the stock, a negative environment? What will happen with it? And these are all the different things that we have to do. And a lot of times, also, when stocks move to risk off, right, is the evaluation. Companies get really, the metrics of the company, and the financial metrics, the financial statements of the company have to match up, right? And a lot of times, the promotion, they're not going to talk about what a company, like for SpaceX. No, I think it's like, what, couple hundred times its earnings, right? But as we know, Elon tells a great story. So you cannot value a SpaceX, or a Tesla, like you would value other companies, right? So you have to understand the behavior of the stock and what we're going. Now, some companies, yes, you're going to value the behavior of the stock, and you're going to value it from its metrics. Does it have a net income? Are they actually generating cash? Right? You'll have you'll have those metrics that you have to go by. But that's not every stock. And especially right now, companies are growing their margins at a staggering rate. for AI, right? So, but what happens is you have comps. And so what's going to happen is next year, because of the profits, the net profit margins were so great for companies this year, next year when you have to compare, that's where the problem is going to lie. And as we talked about, as I discussed in the beginning, is that we will have we haven't had a total risk off event, but well, I guess we did last year, and when President Trump took office, that was a risk off event. No matter where you put your money, the beginning of the year, it was going down, right? So, you're going to have that. But if you look at it, it was a great opportunity for you to get into the market and invest if you did, right? And I invested, and we look for opportunities like that, holding cash, being available. Man, hope you guys like the show. I just try to get on here quickly, get information, help you to get some ideas to profit, navigate. Mag 7, I like them right now. Do your own evaluation. Amazon's really good. I like more. This market is more, I think, building positions for your long-term portfolio, something you're going to hold, for 5 to 10. And man, they were doing some research on stocks, and they were just talking about like Micron, like I think like $10,000 invested in Micron turned to almost $500,000. I mean, you'll have companies like that. It's crazy. So having a dividend portfolio, investing in the companies, you know, people say don't invest in IPO. I say put a little bit of money, and if you have a stock that's really going to make a significance in the market, we know memory is going to be there, right? And we do have to wait for a price. And but you can buy a little one, like I said, 1 or 2 shares to hold in your portfolio, so you watch it and look at the behavior of it. And I think, like I said, you'll get a position probably in September where you'll be able to get some things at some better pricing. All right. But it's all about how you position yourself and being in the market, being in the club. And a lot of times it's not that you don't know, you don't have the information. It's just that it's not a part of your life, right? It's not a part of your lifestyle. When you join a club, it becomes a part of your lifestyle. We meet tomorrow, we meet on Thursdays, and we discuss the market and the moves that we're going to be making for the next week. And if, of course, if you're interested, you can join the club by going to, gotta find my thing. Here we go. Go to firstfruitstockclub.com. Once again, www.firstfruitstockclub.com. Guys, until next time, I appreciate your time, and man, be fruitful. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress.